What do you have in common between accounting and grammar? No, this is not a beginning of a joke. In this Footnote Friday episodes, I will show you how it's really important to pay attention to detail in both. I was going through the Wall Street Journal last month and I came across this article about the performance of the house builder Hovnanian. And for the most part, the article was reading as expected. So they were talking about their second quarter performance. They posted a loss for the second quarter as compared to a profit of $19.7 million a year earlier. So one thing to note, again, when you're comparing quarters, so they're talking about the second quarter, you don't want to compare second quarter of this year with the last quarter, with first quarter of this year, because there is a lot of seasonality in many industries, including in home building. It is appropriate to compare the second quarter of this year to the second quarter of the last year. So that's what we're doing here as well. Then they're going into the numbers on a per share basis, so everything is fine. They're highlighting that the revenue decreased as well as the profits. So again, nothing surprising at this point. And then I got to this sentence. It said home building gross margin percentage before cost of sales, interest expense, and land charges was 14.3%, down from 17.3%. If you watched the last video, you have seen my discussion of the various layers of profit that the company reports or that you can calculate yourself. Gross profit margin is the first profit that we can calculate on the top of the income statement, and we will start with sales and only subtract the cost of goods sold. So if we go back to the sentence again, this should cause us a significant amount of confusion because this says the gross margin before cost of sales. And my immediate question is, how can you have a gross margin before cost of sales? Because by definition, the gross profit is sales minus the cost of sales. It's before all of the other operating expenses. It's before all of the other financing charges. But the cost of sales is definitely subtracted from the sales number. So I don't really understand if you're saying gross margin before cost of sales, what did you actually subtract from the sales in order to calculate this? I decided to go to the source. I'm going to look at the filing. So I am going to look up this company, Nanyan Enterprises. I'm here in the Edgar's main repository. We're actually not going to look at their 10K filings because what we're interested in is an earnings release. The earnings release, which is a much shorter filing. Here we have it on May 21st. We're going to go to the filing and we're going to pull up the exhibit, which is going to contain the press release with the numbers itself. I went to their income statement, and again, for the most part, it was making sense. We have the total revenues, we have costs and expenses as expected. And where I got a lot of clarity is when I kept scrolling, I got to the discussion of the gross margin. And here I see that what they're doing is they are starting with the revenue and then they're saying, we're going to subtract the cost of goods sold, but instead of the full cost of goods sold, we're going to subtract the cost of sales, excluding interest expense and land charges. So they're doing a slight modification to their cost of goods sold. They're highlighting that their cost of goods sold is comprised of the standard building costs, but it also includes interest expense and land charges. And they're pulling that out as a separate line item. If we go back to the language in the article, what it's meant to say is home building gross profit percentage before interest expense and land charges was 14.3%. As it is, because of the grammatical choices of the commas here, it certainly makes it sound like they're calculating the gross margin before cost of sales, which is an impossibility. Instead, this just happens to be a non-GAAP number, not generally accepted accounting number. So they're adjusting their cost of goods sold to be exclusive of interest expense and land charges. And they're saying the sales minus this just adjusted cost of goods sold leads to a margin that's 14.3%, which is down from 17.3% prior. A very short Footnote Friday, which is essentially a public service announcement to be very careful both with our accounting numbers and with our grammar. I hope you enjoyed the video. Please like, subscribe, share it with your colleagues and friends, and I'll see you in the next one.